Welcome back for the second installment of our three-part series on memory with my colleague Shan Rui Yeo. We're going to dive right back into our conversation, and this time through the lens of risks. If you missed part one, by the way, go back and listen to episode 223, where we covered the basics of memory and how an industry that spent decades as a graveyard for capital turned into a genuine wealth creator.
Shan, I want to kind of flip to the other side. So I think you painted a picture for why, or that really sets the backdrop for why we've seen the returns that we have from this from the industry. Just really, really big changes in the demand picture, the supply picture. Can we talk about some of the risks? And I'm sure we'll get to the overcapacity one eventually. But one I wanted to start with is, you mentioned the three players, the Samsungs, the Microns, and the SK Hynixes. There are other players out there, to my understanding, that might be a little bit behind, and in China. Can you talk about what's happening there?
So I think China has always been the biggest fear of competition for, I believe, almost every industry in the world today, whether it's electric vehicles.
Not just a memory thing.
Not just memory. But I think the memory threat is real. Like, there is a competitors in China. So for DRAM, the first company is CXMT, Chansing Memory. So it is supported by state-owned capital. And I think it is about to go for IPO in the Chinese market. So it's not easy to enter DRAM because of the amount of capital and IPs required. And so how CXMT tried to go about was that they acquired this license and DRAM patents from this company called Kimoda. So Kimoda was a memory subsidiary of Infineon that went bankrupt in 2009. So, and this was how they managed to become what we call the fourth largest DRAM company today. So I think everyone should be concerned about the potential oversupply risk from CXMT. So they are going to tap on the domestic capital market to fund capacity expansion. And unlike the big three DRAM producer who are driven by economics and the market, I think CXMT is unlikely to exhibit the same capital discipline that the three DRAM players have. Because the top priority in China today is self-sufficiency, so that China is not reliant on foreign semiconductor control. Because what happened the last 7 years was that the US administration has just put controls over the export of semiconductors and equipment services to the Chinese. So now their top priority is to make sure that they are not reliant on foreign import. So although they're not comparable to Samsung, Hynix, and Micron in terms of DRAM technology, I think the memory shortage has allowed them to gain access to new customer base and even earn a supernormal profit. So there was news that Apple is interested to buy from CXMT, although this is a gray area because of the control by the US administration. And a year ago, CXMT was in losses, and for first half 2026, now they forecast revenue growth of 200% and a net profit margin of close to 70%. So IPO and high profitability, I think these are catalysts for CXMT to aggressively expand capacity. So by capacity, I think they are about 15% of global DRAM capacity, and they have planned to ramp up multiple new fabs across China. So should we be worried? I think there are reasons why I think this is less of a concern in the short to mid-term. So the US government has implemented equipment export control such that key equipment suppliers like Applied Material, KLA, Lam Research, they're not allowed to ship equipment capable of producing DRAM at 18 nano or better to the Chinese customers. So for reference, the big three DRAM companies, they are at around 12 nano today. And at 12 nano, the three memory companies have started to use EUV machines from ASML, and ASML is not allowed to ship any EUV equipment to China. So although CXMT is expanding capacity, the effective supply share is much lower than their capacity share. So compared to their 15% wafer capacity share, I think their effective bit supply share this year is about 10%. Secondly, I think they are certainly qualified for smartphone and PC, but to achieve true self-sufficiency, they have to invest in HBM. And as we recall earlier, we talked about how HBM has a higher trade ratio and a lower U rate. So with a legacy DRAM node, I think CXMT has even higher difficulty when they try to invest in HBM. So a lot of this incremental capacity will actually be consumed by their investment in HBM. And on the NAND side, the counterpart is Yangtze Memory, YMTC. So founded in 2016, I think they were put on the US entity list in 2022. But its global NAND share has actually jumped from like 8% a year ago to 13% last quarter, with revenue growth of 450% year on year. And unlike the DRAM, I think for NAND, China is a lot closer with the global peers, just because it's easier to achieve higher density. So because the way you achieve higher density for NAND is you stack multiple NAND layers together. So this is easier than when you try to string the bit for DRAM and logic. And they do have their own proprietary Xtacking architecture where they do wafer-to-wafer hybrid bonding. So just for reference, I think Samsung licensed this hybrid bonding patent from YMTC a year or two ago. So that shows you that the technological threat from YMTC is a lot more real than from CXMT. Yes.
Okay, so there's potentially a supply response that might come from China, certain categories of memory, maybe more than others, that I think if I heard you right, reasons why that may not come to fruition, given some of the export controls that have been put in place in terms of the tools that these companies need to actually produce at the highest technological levels. That reminds me of another question, though, that I think in the category of risks to the thesis that we've seen play out. And that is just technological change. I mean, throughout history, there has been a wonderful propensity, in capitalism for when there is a bottleneck or a shortage, for technology to come around and just create a solution based on pressure that wasn't there before. Recognizing that, we are in the realm of nanometers and, this is still something very difficult to do. What are some of the technological changes that you think are more or less likely that could really upend the outlook? And I guess I'm thinking a little bit either in terms of something brand new that might displace, or, do you think it's possible that customers might sort of satisfice with something that's not at the very cutting edge? And, the analogy that I'm thinking here is a little bit like DeepSeek, which, compared to ChatGPT and some of these other models, my understanding is it does kind of like 90% a good a job with a lot less cost. And just curious whether you think customers will settle for that, given some of the dynamics that we've talked about. But a long and short to say, hey, what are some technological changes that you're thinking about?
So this is always a risk that I think the industry always face. Although the argument is that they also benefited from this technological change. So I think if AI demand continues to grow, I think the industry players are aware that there is insufficient supply to meet the required demand. And at the same time, memory will get more expensive, which is not what they want, because they want the AI token price to come down over time for the AI inference to proliferate. So I think both NVIDIA and the AI Frontier Labs, everyone is working hard on solutions to reduce the consumption of memory over time. So I would say there are three main broad areas of solution. I think the first is to improve the AI model efficiency through software. So these are methods like quantization. So earlier, I think Google announced this Turbo Quant and also KV cache compression technique. But you still stay within the large language model framework. So the counter argument here is that Jevons paradox, which is that historically, efficiency gain in computing has grown total consumption rather than reduce it. So, one example is, if you look at GPU, Blackwell versus Hopper, I think Blackwell can generate 35 times more tokens compared to Hopper, but that has not actually driven total consumption down. So in the case of memory, when we get cheaper tokens, we don't actually pocket the savings, we actually spend them. So, in the past, when I do a deep research, maybe I used to only fill it 5 to 10 documents because that is the context window that the memory allows. Today, I can maybe fill it 30 to 35 documents. So my inference throughput becomes much better than before. So I'm not too concerned about AI model efficiency. Second, I think AI accelerated designers are working on alternative memory solutions that exploit the entire memory hierarchy. As we talk about SRAM, HBM, DRAM, NAND. So I think at the start of the year, they introduced something called the LPU, which was based on the SRAM. And going forward, I think the industry is working on a few approaches, such as DRAM memory pool, where you share your memory resources across multiple AI accelerators. There are also solutions such as high bandwidth flash, where you use NAND to actually offload some of the KV cache from HBM to DRAM and from DRAM to SSD. And for high bandwidth flash, it will be to offload some of the function of HBM. So there are definitely a lot of solutions being explored today that serve a niche market within the DRAM and HBM demand. But I think none is sufficient to change the overall supply-demand balance. And in fact, they may even drive higher DRAM and SSD demand as you try to offload it down to the memory hierarchy. So I would say the biggest technological risk here is that memory is a constraint only because of large language model, specifically the attention mechanism, which forces the system to hold huge amount of context. So the biggest risk is that large language model is not the path towards artificial general intelligence. So there will be a new fundamental architectural shift that could arrive, and this new paradigm is not memory hungry. And given how fast AI has evolved, I think this is a real possibility that we cannot discount. So it is low probability right now, but you can say it is if we just pull the timeline a bit longer, which is why I think the terminal value is a distribution rather than a fixed number.
Okay. And so low probability, at least for the moment, but high impact if that were to get there. Can we talk about another risk, which I think is front and center for a lot of listeners, that might be in the category of, hey, there actually might be a greater probability of this, which is just the notion of overcapacity. We mentioned the Chinese. I mean, clearly there have been a lot of IPOs in China and elsewhere. I think SK Hynix, for example, just tapped the IPO market in the US. Not the IPO market, but capital markets in the US. So and the reason for this is to be able to expand capacity as quickly as possible. How are you and we thinking about this notion of overcapacity, or just how much demand there is and for how long?
I think it's inevitable that there will be oversupply in the future because the industry is still a cyclical commodity. So the question is always, what's the duration of this undersupply today? And from the customer's perspective, prices have gone up so much. So I think there is also a lot of pressure from the customers to invest in capacity expansion, because I think they are still very optimistic of where demand will be in the future. So, and if demand goes to where they think it is, they clearly need the memory suppliers to expand the capacity more aggressively. So last month, the CEOs of Samsung and SK Hynix appeared in front of the Korean president to make an announcement that they will accelerate investment in memory capacity. So SK Hynix announced that they will commit to invest $700 billion until 2035. Samsung commit to invest $1.5 trillion until 2040. So these numbers are huge, and it represents a huge amount of capacity that can come online over the next decade. But I think, fortunately, at least in the short term, huge amount of this investment will be backloaded in 2030s. It takes about 4 years just to get all this capacity online. So what we see here is that capacity for the next 4 to 5 years can double by 2030, and if the AI demand growth continue, supply can continue to be tight until then. And there's also the question of whether there will be sufficient EUV capacity from ASML if everyone decides to expand. Because it's not just the memory suppliers that have to expand. TSMC has to expand capacity, Intel has to expand capacity. So, and everyone needs EUV capacity. And it's not easy to expand capacity for ASML. So, I think for reference, I think ASML just guided that their capacity for EUV machine in 2027 is 85 EUV machines. So everyone is going to fight for the allocation of this equipment. So you can have trillions and trillions investment plan, but you could still be bottlenecked by the equipment suppliers. So without the EUV, there'll be a bottleneck to the DRAM capacity expansion. But of course, eventually, I think oversupply is very likely, whether it's 5 years, 3 years, 10 years, or 20 years. So I think as long as demand is more than supply, price goes up, and there will always be an incentive to invest in more capacity. But I do think that this is also within the market expectation, because if we look at the memory companies, they're trading at 3 to 5 times forward earnings. So nobody is really saying that these companies are going to enjoy this supernormal profit forever. And for NAND, I think the demand supply outlook is a bit better in the shorter term, because the DRAM companies are all focused on DRAM capacity expansion rather than NAND, because it's more profitable to produce DRAM over NAND, and they know that throughout the cycles, DRAM margin will be higher. So some of them has even converted some of their NAND capacity to DRAM. And for Kioxia, it has committed to building capacity in line with market demand growth. And YMTC is focused on NAND, has also decided to invest part of their capacity in DRAM, although they are supposed to be the national champion for NAND. So I would say in the short term, I think the supply outlook is much better for NAND. And so I think oversupply is definitely a risk that I think we have to take into account.
That's it for part 2. Next week, on the final installment of our series, Shan turns to valuations and making sense of big market movements. See you then.